Hello guys, welcome back to the TA Analysis YouTube channel. Today I figured that we'll be covering some macro news that is quite significant. It happened quite recently, just a past day. So what happened is that US Treasuries lose the last perfect credit rating amid rising debt. So for this most recent one, it is by Moody's. So previously the S&P Global as well as the Fitch Ratings actually downgraded US debt from AAA rating to AA. So over the past day, Moody's, another credit rating firm, has expressed concern over the US government's ability to pay back its debt through its issuance of treasury bills. Therefore, Moody actually lowered the US debt rating from AAA to AA on the basis that it's a bit difficult, or rather on its basis of concern over US administration to pay back its debt, and also the US administration's failure to reverse the ballooning deficits and interest cost. So a AAA rating signifies a country's highest possible credit reliability, and it indicates very good financial health under usual circumstances, and also a strong capacity to repay its debts. But given US's ballooning debt and rising interest rates, or rather elevated interest rates, Moody's had decided to downgrade this uh, to AA. So this downgrade reflects the increase in over more than a decade in government debt and interest payment ratios that are uh, increasing to this. They are adding on to this U.S. debt crisis. And yeah, this is quite significant because usually we are looking at U.S. debt as the AAA rating, and it is one of the safe haven in terms of investment strategy. So right now, the downgrade from AAA to AA no longer signifies that the US debt is 100% a safe haven, and also many people are also looking at it and following it closely. They may not be as confident as parking their spare cash or spare liquidity in the US Treasury anymore after this downgrade in the rating. So, what do I think about this? I think this just serves to further my conviction in allocating my assets to Bitcoin, XRP, crypto, you know, gold, silver, commodities, anything that is alternative assets, which also globally recognized. So therefore, I have been adding on to my crypto and gold positions. These two are the main two positions that I'm looking to add. And personally, I'm looking to add more Bitcoin because I do not have a lot of Bitcoin. I aim to achieve at least zero point 0.1 Bitcoins, but that will take time because right now Bitcoin is standing at over $100,000 per coin. So just getting to zero point 0.1 is actually quite difficult already. So the alternative that I'm looking at is actually getting Bitcoin exposure through the Bitcoin ETF. And the one that I'm looking at is IBIT. I think as long as the USD continues to devalue, at least you need to have something that tracks the devaluation and also increases its value against the drop in US dollars. So I think a Bitcoin ETF serves that purpose. And talking about ETFs, another ETF that I'm looking at is the gold ETF, GLD ETF. I do believe in buying physical gold and storing physical gold. However, uh, it is as much as in terms of physical gold, it is quite a hassle to store it, and you can only store as much as you are comfortable with. So the rest of the liquidity, I think it would be also possible to consider the option of investing into a gold ETF. I do know a lot of people that say not physical gold is not your goal, but however, in this case, I'm just looking to track the price of gold. So one advantage about physical gold ETF is that it tracks the spot rate and you lose less money over the spread compared to physical gold where you lose quite a lot during the spread. So if you are investing in gold for the very long term, I'll say go for physical. However, if you're just tracking the gold price and making sure that your liquidity, your assets, and your dollars doesn't devalue alongside inflation, then you can park it in GLD where you can exchange it for back to dollars quickly without losing a lot of money. All right. So that's just my quick comment on this latest news by Moody. And do take note that whatever I share here is not financial advice of any kind. It's only for informational and educational purposes only. Please always exercise your own due diligence and research. And if you find my videos useful, do drop a like, share, and subscribe. And I'll see you guys in the next one. Thank you.